Occupancy has been driving our growth, and we expect to drive our growth going forward as RevPAR continues to recover and exceed 2019 levels.
I'm joined today by Richard Stockton, President and CEO of Braemar Hotels and Resorts. So Richard, are RevPAR and ADR trends across your portfolio a sign that recovery has taken hold in the lodging sector?
Absolutely. RevPAR has been bouncing back over the last, I'd say, 12 to 14 months. And over the last 3 quarters, we've had record results. So we're trading at levels above 2019 in terms of RevPAR, ADR, occupancy. Just to kind of give you an example, in the third quarter, our RevPAR was 19% higher than the third quarter of 2019. And ADR has gotten to a rate where we're a little bit above 2019, but we really picked up lately in occupancy. And so occupancy has been driving our growth, and we expect to drive our growth going forward as RevPAR continues to recover and exceed 2019 levels.
You recently announced plans to acquire the Four Seasons Resort Scottsdale. What impact will this have on your portfolio?
Yeah, we've had a unique opportunity to acquire this property. It's an absolutely gorgeous property in northern Scottsdale, and it comes with an interesting affiliation with the Troon North Golf Club, which is a great golf resort. It's really impactful to us in a couple of ways. It further diversifies our portfolio, so it's our 16th hotel that generates about $15 million of NOI on top of roughly 150 or so already, so it's good to diversify. But it also brings us a new geography. It's our first acquisition in Arizona and in that Phoenix, Scottsdale market, which is a very attractive, high-growth market for us. It's also a very high-yielding property. We're buying it on an initial 6% cap rate that we expect to increase considerably over time, as there was disruption this year due to some renovation that we won't see next year. And lastly, it's our first Four Seasons, and Four Seasons is a great brand. As you know, we specialize in luxury hotel investment. We have a number of great Ritz-Carlton hotels. We have a Park Hyatt. So adding Four Seasons to the mix, I think, really shows that we truly have the best, highest quality portfolio of hotels in the lodging REIT sector, and it'll further drive our RevPAR even higher.
And what are some key aspects of Braemar's balance sheet strategy to navigate likely headwinds ahead?
Yeah, the biggest news in terms of balance sheet management this past year has been interest rates. And we have almost 100% floating rate debt on our balance sheet. And so what's been really critical is to manage interest rate caps so that we're not exposed to a very high interest rate environment. So fortunately, we have done that all along, and we have 77% of our debt fixed at interest rates of 4% and higher. And so we're capped out at 4%. In fact, our weighted average caps are 3.7%. So despite interest rates moving up, we've been able to firstly outpace it with the growth of our top line revenue. And then not only that, we're now capped out at a place where any further interest rate increases just won't hurt us. And so that's been a really important part of our balance sheet management. And all along, post-pandemic, we've also been able to deleverage, bringing our net debt to gross assets down to about 37% today, which is even lower than the sector average.